No one. I love that. I love that. Group of healthy traders. But maybe that's why we're here, sat on a Zoom call on New Year's Day, rather than in bed hanging like Carwin clearly was. He sounded like he had a good night. 6 a.m. I don't miss getting in at 6 a.m. I'll tell you that. Mm. Right, let's get stuck in, guys. Because the greatest game show that's ever been created starts at 8 o'clock. Does anyone here watch Traitors? No?
No, I heard about that, mate, but I never watched it. Is it good?
Quality, mate. I don't watch game shows. I don't really watch shit TV. I like things like Yellowstone and Game of Thrones, and like I get like
Have you
getting
watched
stuff.
that new? If you like Yellowstone, mate, it's 3 hours long. It's called Horizon.
Horizon, yeah.
Have you watched it? I
I've
like
not
a good
watched
one.
it yet. No.
No, I watched it this morning. It's all right, to be fair. It's
If
long,
you like
but
that, if you like that, go and watch Yellowstone.
yeah. See, I've done 1970 and the other one.
Well, you not watch Yellowstone?
Nah, I've never watched. I've seen like a little clip of it. It's got that mad blonde-haired woman in it?
Yeah, yeah, yeah. Mate, you
Psycho
got to
mad.
watch Yellowstone, otherwise, because you've watched the prequels before watching the actual series.
Yeah, so I watched like 1970, then the
Yeah.
one with the girl and her dad, where ends up getting bit by a snake at the end. That's
83.
like
Yeah.
19 something else in it or something, or
Yeah.
18 something.
Yeah, that's it.
And then I just watched that Horizon, which was all right, mate. I like a good Western.
Nice, nice. Well, yeah, I don't watch shit TV, and basically we ended up like catching an episode of this Traitors show last year, and we just got absolutely hooked. And it's quite an easy premise. Basically, they have like 25 people on the game show. And does anyone remember when they were a kid playing Wink Murder?
Yeah,
Oh,
yeah.
mate,
Yeah?
I think
Yeah.
so. Yeah,
That where you
the
sat
name
around
rings a
the
bell.
table and someone like winks at you and you have to pretend that you're dead. It's like that, but in a game show. So they take like 25 people and they basically, at the start of the game, on the first episode, three of them get picked as traitors. And then they go around doing the game show, and every night they meet in a room and they kill someone off. And the next day, when everyone gets up, that person isn't there anymore. So all the other people are trying to work out who the traitors are. And then obviously the traitors are trying to make sure they don't get caught. So what they're doing is they're trying to like how like they're trying to like lie and say, oh, this person's looking a bit dodgy to me. And it just gets proper nasty where like the traitors are ganging up on this like completely innocent person. Honestly, it starts tonight at 8 o'clock. I wouldn't normally promote shit TV because we've got work to be done, right? It's the new year, right? We're about to get stuck in New Year trading, and this it's just amazing. It's just I would highly recommend it. And it starts.
Sounds a bit like werewolf that you play around the dinner
That
table.
werewolf one I've heard, is that something to do with like Russians or something, where it's like a werewolf and then there's villagers, isn't there? And
Yeah, yeah,
yeah, I've heard something like that before.
and
Yeah,
a doctor as well who saves whoever's going to be killed.
Oh, really? I've never heard of it.
Yeah. Oh,
Interesting.
okay.
it's
Or
basically what you just
vampires.
explained, but
Yeah.
yeah, it sounded quite good though. No, I was going to watch that Terrifier 3 tonight because me and the missus watched Terrifier 1 and Terrifier 2.
Yeah,
And mate, that's just fucking
they're
mate. To be
rough, aren't
fair,
they?
that actor who plays it, mate, is like so underrated because he plays like being a fucking psychopath, like amazingly well. He like rarely speaks, but it is
Yeah, he's
brutal, isn't
nuts.
it?
He's nuts. Right, anyway, guys, let's get stuck in then. So who's got some questions for me? Who wants to go first?
Mate, I will probably tomorrow because I'm actually gonna get some back testing done.
Nice.
Obviously, with the stop losses, by limits or set by stops, I'm gonna have to do it that way at work.
Yeah.
So I'm probably gonna have a few little questions.
Yeah.
I haven't got the time to wait for like an ISC or MSU with my work. So
Okay.
I've got to try find a way. I got to try and measure manipulation and stuff.
Yeah. All right, we'll make a
I don't know
plan.
if
We
you've
catch up
got
on
any
Friday anyway,
ideas
won't
on
we?
that.
We'll catch up on Friday. We'll go through that because that's
Yeah.
specific to you. Anyone else who wants to kick us off?
I had a question. Remember that
Yeah,
question
go
that
for
I
it.
put up on that I messaged you on? It was to do with the coursework, but it was a question anyway, like in terms of
You message me direct.
yeah. It was basically I was looking at one of Sam's charts
Yeah.
and I got a little bit confused in terms of whether I was reading it right because I saw the markup as a bullish, but then there was a sell that was taken and that's where I got confused a bit, like what I wasn't seeing.
So Euro USD on the Is that 11th of December? So this is your, Sam, this is your 3.2 coursework. Was that trade on the 11th of December? Do you know? Do you remember?
No, not a clue.
I put a link on it in the thingy. It was. I mean, obviously
Yeah, no. I'm trying to find specifically where it is on the Euro USD
Oh,
chart so we can go through it. Let's try and find it. So it's the 11th of a month. How
What
far
day
would you
was
have
it?
gone back, Sam, on that coursework, do you think?
Not too far because the 5 minute, well, 1 minute only lets you go back like 2 weeks, doesn't it? 3 weeks. What module was it?
Hang on, let's have a look. Let's find
three
it.
point um
So
2, I think.
Yeah, I think it was 11th of December, wasn't it?
Oh, sorry, modules.
What time frame was it?
it was
15.
on the 15 minute, 11th of December. Yeah,
It was 11th, was it?
yeah, about 6 a.m. it was. Well, the 12th, yeah. Well, the 11th till about dinner time.
Where is it? Why can't I see it? One in there? Isn't that one in there, is it? No. I think I know the answer to the question, so if we can't find it, I don't think it is the 11th of December. Between the Oh no, hang on, it's there. Is it there?
It's the
That one there.
16th. Is it the 16th? That no, can't be.
Hang on. I know I can do this easier. Let's open it up. Right, so the 11th, and it would look like it was about to New York session on the 11th of whatever month that was. New York session on the 11th. Is it that one there? Doesn't look right, is it?
I noticed it. Is it November then?
Must have been.
No, it wasn't November because that was a big drop.
We can't have gone that far back, can we? Because like you said, you wouldn't have had the October. Definitely EU, isn't it?
Yeah.
There it is. September. Okay, cool. So your question was, is this a valid setup? Because the chart looks bullish. Yeah.
Well, I think where I was getting confused was that obviously the trend is.
So you've got if you look at the bottom left, you've got a little like green pen. If you click on that annotate button, you'll have tools that you can then draw on the chart with.
Oh, right, okay. So I was just basically confused was in terms of it was just the fake the structure, fake break or structure, and
Yeah.
then the true break.
Yeah.
And again, because it's marked above,
Yeah.
when it's marked above,
Yeah. I think I know what you're saying. Okay, so
understanding you take
let's
you're
break
for
let's break down the chart, right? Okay.
yeah.
So let's go from left to right. So we've got nice trade here, to be fair. Fake break a structure or false break into a trap. You'd have a lovely little setup there. That is kind of picture perfect. That's the sort of setup that I'm looking for all day long. The 15-minute chart, you get a trade like that, trade into a trap like that. I know we're digressing a little bit, but that is my favorite setup. Taking a sell in there, waiting for a shift. 1 minute shift will be acceptable on that because we are obviously in line with the higher time frame narrative, which let's just say for argument's sake, we've got our daily and our weekly all in line with each other. If we're going to assume that our 4 hour structure is probably something like this, okay, this is probably our 4 hour structure. I'm going to assume that Sam has done his ranges correctly. Okay, we therefore confirm that this is our 4 hour range. Okay, remember the reason why we mark on internal liquidity is because it is just that it's internal liquidity and it's less relevant to ourselves. So, although this is an internal and this is an internal shift, what we're expecting is that this is just a means to an end. So there's no harm in taking a buy from here if you are bold and brave. You can take a buy from here. You can trade up. For me, I'm looking at my EPA level as my first target or my equilibrium level as my first target. So I'm probably not taking a trade in here. Reason being is that I probably haven't got enough room to maneuver in order to get myself into a safe trade before I reach an area where I'm going to expect a sell from. And that's why you'll see me trading a lot more of my entry model A or B, which is my kind of pro momentum, so trading with momentum. You'll see me trading those a lot more than I will trade against the momentum. You've got to have a lot to happen in line with momentum before you can find a valid trade. For example, you've got to have, a nice enough shift. You've got to find maybe a nice shift on a lower time frame, and we've got this kind of squeezing shape here. That doesn't bode well. What we would ideally want is a shift like this, and then you could take a trade like that, and then you might be able to get 2R before your equilibrium level. Now, the reason why I'm going over that is because it's something we've spoken about quite a lot, and I think, Haz, I know what you're saying. I'm going to come back to your question in just a moment. But I see this quite a lot. This desire to trade from these when you're trading against momentum. The problem that you have with these trades is you often have to force a lot of the confluences in order to make them work. And for me, if I'm trading a trade like this, I want it down here. I want my EPA up here, which will then probably be in line with my equilibrium. And then I've got loads of room to maneuver, and then I can get in something like that, right? Okay, and that will give me a nice trade. So when you get big, bold ranges like this, you often get these on like news moves or like FOMC, NFP, that sort of thing. You can often trade back up to there. You've normally got enough room to maneuver. But if you are trading against the momentum, and those of you that have done trading plans recently, you'll know I've made almost every single one of you put in a specific entry model for trading against momentum, because it does have to be traded differently. Okay. So that's why you see me taking less, because the markets look normally like this, okay, and therefore you don't really have enough room to maneuver for us to be able to get back up there. Now you can be bold and you can say, right, I'm going to expect price to take out internal liquidity, which would be range liquidity. For those of you who know the kind of the older content that we did back in 2024, we class that as range liquidity. For the rest of us, we just class it as a key internal liquidity. It's inside the range, so it's an internal liquidity. Either way, it doesn't really matter as long as you understand that it has less impact on the markets than the external liquidity. But you could get a trade out of here if you are expecting price to come up and take this, or expecting price to come and take the external, but you run the risk of price doing this, hit an EPA, and you'll all have seen this, you'll have all be fallen foul to this, you'll have all taken this buy at one point in time, and then the market just drops on you, takes out your stop. Sam, I think you had one of those yesterday, I believe.
Yeah.
And it's really frustrating. And me and Sam, funny enough, we had a one-to-one at a similar sort of time. And I think we both kind of agreed that these are the sort of trades where you probably just want to be sitting on your hands and waiting for, like Sam had, if you don't remember me saying, Sam, I think you put it in the group anyway. He had a loss in the morning on GU because he was buying like this. He got stuck on the EPA and it dropped. That's when we took the short together, and then he waited to the afternoon and he got a really nice long position, which was then in line with momentum. He got a really nice long position on USD JPY, and I think you posted in the group, or maybe you posted to me, and you said something. I can't remember what you said, but something along the lines of how important the patience is of just waiting for these things to happen. Because remember, if the momentum is strong enough, the market is probably going to continue in the higher time frame direction. Okay. Unless you're stuck in a range. And if you are stuck in a range, a trade like this will still work out really, really well. A trade like this, however, may not. Okay, because even if you're stuck in a range, there's always a higher time frame narrative. That range, for example, it's just is that not? So that range, if we move this up here, can we get rid of that? Is that going to go? Okay, if you are stuck in a range and price is just doing this and sweeping the range and coming up and sweeping the range and coming up, okay, what normally happens within ranges is they come from somewhere. So there's normally always a higher time frame narrative to a range, and that could be that it's come from a bearish leg, we're then stuck in a range, and therefore the likelihood is still that it's going to continue. Okay, so that's just a point I thought was worth mentioning on Just try and get rid of some of these. We clear that. Delete, clear. There you go. Clear all drawings. Okay, cool. So, as Sam has correctly acknowledged, and did you do this IFBS and IFB and ITV on the 5 minute?
I'm going to say no.
Okay,
I'm
fine.
going to say that was all 15.
Let's just use this chart as our example, okay? What Sam has correctly acknowledged is that the shift, bullish, technically, on this price, if we just take the chart for how it is, hasn't shifted and confirmed bullish until we're up here anyway. We're now in premium pricing, okay? We're actually in the extreme of premium, and we've swept external liquidity. So we're now in an area which is really, really, really high probability for shorts, okay? So, coming back to your original question, yes, we have shifted bullish. You are correct. That is a bullish shift, but it's an internal bullish shift, and therefore we only expect it to. And this is, we try not to predict the market, as you know. We try not to expect or presume what the market's going to do, but there are elements we do have to have that kind of. What's the word I'm looking for? We do need a bias, okay? We need to use our theory to influence our expectations, whilst our strategy itself teaches us to let the market show us what it wants to do, okay? There we can have an expectation based upon the theory that we learn, okay? We just don't trade off that expectation, okay? We watch and we wait from that expectation, okay? Hope that makes sense. So we've had that shift, it's gone bullish, it's then taken out external liquidity, okay, which is the best form of liquidity it can take on the chosen time frame. Remember, if our higher time frame narrative is to continue and price comes and takes a external liquidity level, that is the best form of liquidity that can be taken, okay, because it's now got in the most. If you think about it from an institutional order flow perspective, they've put in a bulk of orders here and they've sold and they've sold. They've then forced price back up quite quickly, and those big impulsive moves, they often trick people into going long. They force price back up really, really quickly. They've come back up, meaning that they've made money off their buys, they've closed out any negative buy positions they have here, and they've added in a load more sell positions, okay? So the institutions are now really, really happy. The reason why this trade is acceptable within what we would class as a bearish marketplace is because the higher time frame narrative is on our side, okay? We're coming from a big bearish leg, we're in a bearish range, we've taken out external liquidity, and we have a complex reversal. Do you remember what the complex reversal is? It's cool if not, I can go through it.
No.
Yeah, you go through it for me as well, mate.
Actually, I'll go through it. Okay, cool. Right. So the complex reversal is as follows. Just get rid of that. Come on. Okay, so if we're in line with higher time frame narrative, okay, then we can trade off, three potential entries really, okay? I'll draw them all out for you. The first entry is external sweep, okay? Actually, let's change that. First entry is an external sweep, a first break, a retest, and a sell-off, okay? Because we are in line with our higher time frame narrative, we can trade a first break trade if everything else is in order. Okay, make sense?
Yeah.
Okay, so that's entry number one. Entry number one. Okay. Entry number two is external sweep, first break, true break, retest, sell off. And obviously, I'm assuming that you're all including in here a MSU setup, okay? Because that's what we take before we take a trade, okay? So that's entry number two. That's your safest entry, okay? Complex reversal is exactly that. It's a bit more complex. Okay, and it's very similar to entry number one. It's a sweep. It's a first break. It's a sweep, and an MSU. Okay, so first break. What does the first break give us, guys?
Sit on the floor.
Crap.
Crap.
Trap. Okay, this is a trap. MSU, then you can enter off the back of that. Okay, that's entry model number 3. So if you're looking at external sweeps, okay, there are 3 possible ways. And I mean, this isn't all. This could also be an internal sweep. Any one of these you could trade down here as well. Okay, doesn't have to be external. I would just personally wait for external. I mean, for argument's sake, let's just say we're waiting for external sweeps because we're using the 15-minute time frame anyway, right? So let's just say we're waiting for the external sweeps. So what Sam's marked up here really is just entry model 3. Internal false break structure, or IFB. What Sam could have done that he hasn't done on this chart is he could have just marked it. Okay. And this is why, again, I want you guys to ask me questions because I'm guilty of this as well. Sam's marked on a complex reversal, okay, very clearly. He just hasn't marked on the trap because he understands the complex reversal really, really well, okay? When you have all of these confluences in line, you've got your key time of day, you've got your higher time frame narrative, you've got an external sweep, you've got a 4-hour range, you've got all these factors which are confluent towards your sell trade. You are able to get into those trades a little bit sooner than if you were trading counter trend. For example, if I'm trading counter trend and I'm taking a trade from down here, I wouldn't take a entry model 1. I wouldn't take that. I wouldn't just wait for one break and then push up because I'm asking to get stopped out. I'd trade entry model 2 and I'd trade entry model 3, okay, because they're both more confirmed entries. Even entry model 3, which is the complex reversal, even entry model 3 is a riskier entry if you're trading against the momentum. Okay. Okay, so to be on the safe side, guys, and for those of you that are, newer, I would just be taking the best quality trades at the moment. And that for me would look like an entry model 1 or an entry model 2. Okay, entry model 1, entry model 2. Okay. Entry model 1 can only be traded in line with momentum. Okay, with momentum. You can only trade entry model 1 if you're in line with the higher time frame momentum. Entry model 2 can be traded anywhere. Come on. Anywhere. And these are all not really entry models, really. They're reversal patterns technically. Okay. But these can all be traded. You can trade entry model 2. You can trade reversal pattern 2 anywhere because it's that ITB that gives you that confirmation so you can safely get into that trade. You can take a trade like that from anything and anywhere. That is your safest setup. Okay, that is your safest setup. The others, they have criteria that go with them. And this reversal pattern, you have to be in line with momentum. This reversal pattern, really, you should be in line with momentum. You can trade it against momentum if you want to, but I wouldn't advise it. I wouldn't really advise trading against momentum until you guys are, funded and secure. Just sometimes having too many entries and models and reversal patterns can actually be damaging. If you were to just trade this and nothing else, if you were just trading that and nothing else in line with momentum, you'd probably find it difficult not to make money. Genuinely. It's such a confirmed entry and you're trading in line with a higher time frame narrative. It's difficult not to make money with that. The reason why we include that is because often price will go without you if it is in line with momentum. Okay. If you're looking at trades like, let's try and find one. Here. Okay. If you'd waited for that true breaker structure, okay, you wouldn't have had an entry. So that's a perfectly safe entry because you've got your first break here and your true break there, and you're in line with higher time frame momentum very clearly. So you can take that trade all day long. And if we go down to a lower time frame, I'll get it down and lower than the 3 minute. Okay, there you see your MSU setup here. Okay, you take yourself a nice MSU2, stop above the high. First profit target would be that low down there. Actually 2.8 off, done. Liquidity taken down there. And then you could hold it for double, maybe triple. You know, you could then hold 10% or 20% down to there. And if you hadn't entered on that first break, okay, if you hadn't entered on that first break, you would have missed out on that entry. You had 9 o'clock news there, so it's probably maybe not the safest day to take a trade, but you can see the theories there, right, guys? Okay, and that's why ideally you want to have these models. What have I just done there? Shit, my chart gone. Yeah, that's why ideally you want to have these models in your head. Basically, you want them there, ready to go whenever you need them. Shit, can't get across them. It's because of the replay tool, isn't it? Fuck's sake. Let's play this on a little bit. Sorry, guys. Okay. So I'm recording this session, so you can go back through this. But if you don't know those off the top of your head, those are your reversal patterns. Okay. Do you know what? It might be worth, I might actually do an actual course module on this, on the reversal patterns themselves, just so you've got it clear, or, you've got this to go back to anyway. All right. This is one that we probably haven't discussed enough. It's been in various live sessions, and this is why it's so important to come to these live sessions. And thank you for those of you that have come. Most of you are here every single session anyway, but we discussed this one quite a lot in the live sessions. It's possibly worth doing an actual course video on that, course module on that. So I'll possibly think of putting one together for you guys as well. All right, but this one. You should know this one really, really well. It's your standard reversal pattern. The complex reversal was again in the boot camp. If you don't remember the complex reversal, or you're not clear in your head, go through it. It will be in. Have a look. Where will it be? If I go back, it will be in November boot camp. Call a module 2.2, reversal versus continuation. Okay, it will be in there. All right. But yeah, I'll put together a video on reversal patterns for you guys as well. All right, I'll put that on my list.
Hey, can I ask you about the entry on Sam Sharp?
Yeah.
Yeah, just because it's an external level. Where are you putting your stop? Like how many? If you've got like a fixed pick rule above?
Yeah. Reversal pattern video. I've got to write it down, otherwise I'll forget. So that's an MSU1.
Yeah.
Okay. MSU1, you just take the entry with a stop above the high, the extreme high.
Okay. Well, I was going to say, based on the timing, because like, how do you combat looking at that 15-minute external? Because I don't know if you see it, like you've got the false break and the true break probably on a lower time frame there. How do you combat not being swept out by like that third hit?
What, this one?
Yeah.
This one here?
Let me see if I draw on a see like because it's on the 15-minute.
Yeah.
So if it was a lower time frame, would you not see like that as a false break, true break, MSU up here, stop above the high, somewhere up there?
Let's have a
Yeah,
look.
you
See
probably
what I mean?
wouldn't take a loss on that. You probably would, yeah.
Yeah, fair. Is it
So
low?
would you have like a fix? Have you got like a fix sort of?
No, you just take a loss.
No, okay. Oh, you just take loss. Okay.
Big loss, yeah.
It's just an unlucky one, that, to be fair.
Let's have a look. So it was the 11th, wasn't it? September. Is that right? Am I being dumb here? Yeah, it was, yeah. Okay, cool. Right, let's mark it up. So external sweep.
I suppose it could be time as well, though, actually.
Yeah, you might have taken a loss on that one, to be fair, because you got false first break here. And then this is, I wouldn't class that as a true break until there. And then I still might have been stopped out.
Mate, just a quick one. I've always been taught to class breaks as with the bodies, not the wicks. So would you not wait for the body to close for a true break? Obviously, would you not be waiting for the body, a candle body, to finish below that low?
That's
instead of the
exactly
wick?
why I said I would wait until that one.
Yeah, right.
Yeah.
I'm with you. Yeah.
Because if I'm getting a wick, that doesn't indicate to me that I've shifted yet. However, I've got my higher time frame narrative here, remember? So I would have probably already entered like this. And I would have been stopped out there. But remember, for me, guys, I'm taking most of my profit out at 2 anyway. So I would have been stopped. I would have taken my profit there if I'd been lucky and I had the spread right. Let's say I got in, I'd have taken most of my profit out about here. And then I would have been stopped out there. And I probably would have gone for a second entry once I had that trap swept. Probably, obviously, it's difficult when you're in the moment, of course. And what time is that? Yes, that's 7. No, I wouldn't have actually. Let me just play this through. So I wouldn't start trading. Why is this chart all weird? 6 a.m. Huh? 6 a.m. Why is that starting so early?
Yeah, is it because of the clocks?
Oh, well, the clock's different. No, this is September. Weird. I'll check in a minute. Yeah, so I don't start trading till about 8 o'clock. Yeah, I would have probably taken a loss. I'd have probably taken that. Depending on how I got in, I might have been lucky. What I'd normally do is when I'm approaching my target anyway, I'd normally go to break even once I'm nearly at my first target. So I'd have either caught my profit or I would have been basically at break even. Or I might have even got a loss if I was feeling bold. But what I would do then is I would take that second entry here, something like that, on the trap sweep. So that's the trap that's been swept. And so let's say I got break even there, I would have taken that second entry. Because I'm still bearish overall, right? And sometimes that will just happen. You've got to not be afraid of taking a second entry. And when I say a second entry, that is what I mean, a second entry. Not a third, not a fourth. If your trade fails twice, then and it only fails by a third. This is why I have a 2 entry rule, okay? If a trade fails once, what could that be? What could be the reason that that trade's failed?
Mistiming or trap?
Yeah, trap. Yeah, you're nearly there. What does a trap do? Or when the trap's swept, what are we sweeping?
Manipulation.
Yeah, manipulation of
Liquidity.
liquidity, exactly, right? So if the trap is swept or if my stop is swept, therefore, that is a manipulation. Okay. If you have a manipulation and then you have structural shift, so i.e. first break of structure, and everything else is in line, so your momentum and everything else that you're looking for is in line, that should be a safe second entry. All that the institutions have done is they've just come and swept out us early sellers along with some retail. They've grabbed in a load of extra money. Okay, you've got an ISC here, as you can see. You've got a lovely MSU entry. Okay, I mean, you've got one there. You'll have seen that on the 1 minute time frame better. Or you could have waited for this one and taken an MSU2. Either one of them would be perfectly acceptable. So you've got one here. Zoom in for you guys. You've got one here, that sweep there. That's the nicest one. It probably looks really nice on the 1 minute, but I can't get down to it. And then you've got one here. So you've got two possible entries here. Let's just forget about the fact that we got news. Let's just assume that it's not news and it's just normal market conditions. You've even got a first break here as well. Okay, and then you've got a 5 minute first break there. So you've got a lower time frame first break MSU. So that would be a complex reversal entry. Okay, so your complex reversal, when that occurs, you can take a 1 minute MSU. Okay, if you're waiting for confirmation, you've got lovely big impulsive imbalance bearish candles here. First break of structure in line with higher time frame momentum. Lovely little 3 minute MSU engulfing, stop above the high. Beautiful little entry. That I would look at that and be like, that's never going to stop me out. That's just so clear, so clean. You've got this lovely little sweep of manipulation, taking out liquidity. Everything's in line with the higher time frame narrative. Prices struggled to make any higher, failed, got up there, grabbed liquidity, but immediately broken down. All of this is telling me that this is bearish market conditions. But what the dumb money's doing is they're looking at this thinking price is going to continue going up. We've had this structural shift. We're going to continue going up, blah, 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 blah. So that's what the dumb money's doing. It's buying, buying, buying. Also, remember, when price is low, what does dumb money do?
Buy at a lower price.
They buy. So when price is low, the dumb money's buying. So what are the institutions doing?
Selling.
Selling into it, exactly. Okay. One of the best kind of filters for your own mindset is if it looks like the market is doing something, like from a retail perspective, just do the opposite. Go and do the opposite. If it looks like it's getting higher and higher and higher, then sell into it. Because you're more likely, like, think about it this way. If you've spent the past 2, 3 years, however long you guys have been trading, losing money, that's because you've been trading the wrong way, ultimately. If you'd reversed every single one of your trades that you've taken over the last 2, 3 years, or however long you've been trading, you'd be in profit right now, right? So whatever you have been doing, do the opposite of it, and you'll probably make yourself more money. Now, obviously, there's a bit more logic to it than that, but all the dumb money's going to be buying from here. But also remember, think about like liquidity and, what do we say about Asia? What does Asia do? It does one of two things.
Builds liquidity or takes it.
That's it. Creates liquidity or takes liquidity. Okay, what has Asia done very, very clearly?
Built it.
It's taken it. Pushed up, pushed up, pushed up. It's taken that liquidity to the left. And then price has, now sold into it. So this is actually a really good example, Sam. It's a really good example of our strategy playing out with theory and models and all that sort of stuff. It's a really nice example. And thank you, Haz, for your question, because I think it's a good one to come to. I know we spent a lot of time talking about this section of price. Hopefully that answers your initial question. Yeah?
Yes, wicked, yeah. Thank you.
Good. Right, we've got about 15 minutes, guys. Any other questions for me?
News trading.
What about it?
Why is it so confusing?
Why is it so confusing? It's not confusing. It's easy. So there's two ways to enter on news. You can enter either on a continuation pattern, but they're much more risky and much more difficult, or you can enter reversal. I'm not going to use that one because that is FOMC. So news trading are one of the times where I really like trading against momentum, because you can normally get yourself some really nice entries. So this is a good example here. Let's use this one. I don't really like trading continuation news because I don't feel like it actually gives me very good entries. But news trading itself is really easy. This is 1:30 news on Thursday, the 17th of October, which is going to be like CPI or something like that. Okay, so news trading is actually really, really simple. We did the bootcamp module on it quite recently, so definitely if you're struggling with news trading, just go and review that. That's one of the first things I'd say. What we're wanting price to do is we're wanting price to grab some sort of external liquidity and then sell the shit out of the marketplace in this example. And then it couldn't be more simple. The move that swept liquidity, and what I will say to this as well, if you don't understand the fundamentals, and I'm not an expert on it by any means, but I've got a better understanding than most, you don't understand the fundamentals of what's happening with the news and what impact they have on the specific currency, and all I really care about is dollar, sometimes GBP, sometimes euro, okay? But for most of us, we're trading dollar related pairs, okay? If you don't understand it, just before a big news event is coming, and I'll be talking about it in the morning analysis. There's normally chatter about it in the group. So part of your daily routine should always be to check the news. That's the first thing I'd say. So if you guys don't know how to do that, there's a website called Forex Factory. It's really, really easy. Go into Forex Factory, change your settings so that your time zone is where you live. So for most of you, it'll be the Edinburgh London time zone, time format AM PM. I've never changed that. And then what I do is I take out everything. Don't know why they're selected. I take out everything but the red news. Okay, red and the grey. The grey is things like your bank holidays and things like that. So the red news and the grey news is all I care about. And what it'll then do is it'll show you what red news you've got coming up. Now, sometimes you'll see a big news event and it'll be like an orange news and it will catch you by surprise. I don't really care about them, if I'm honest. They don't affect price enough for it to be a consideration of mine. But if you do want a full view on news, then have your orange news selected as well. Yellow folder news, you don't need to worry about. Okay. But if you want to make it simple, just look at red folder news. Okay. You're going to always get, as long as you're trading safely and you're trading with good risk management and you're trading your setups and your higher time frame narrative, then news shouldn't affect you too greatly anyway. There's obviously some basic rules, i.e., if you know a big news event is coming, don't take any trades in the, whatever window you want, 30-minute, an hour beforehand. The news that we care about and the serious news that we care about is the 1:30 news. So that's 1:30 UK time. And you're looking for things like CPI, PPI, NFP, FOMC, which is normally at 7 o'clock. If you are ever unsure about news, then come and ask me and I can help you with that. Again, I wouldn't say I'm an expert on it, but I've got a better understanding than most. But part of your daily routine should be always to check this. Okay, so Thursday, for example, we've got unemployment claims. Okay, so you click this little folder down here, tells you what the previous results are. And then what I do, if I really want to understand it, is I'll go to ChatGPT. Oh, this fucking thing. Hang on, let me just get logged in, guys. Okay, so I'll go to ChatGPT and I'll go acting as a Forex trader, trading primarily Euro USD. I want you to give me a simple explanation as to how the unemployment claims at 1:30 p.m. UK time tomorrow might affect the dollar. Please give me the broad strokes, how I should be trading around it, and explain to me how it affects the currency pairs I trade. What is your forecast? What will potential different outcomes mean for my trading? Okay. If you prompt ChatGPT in a really correct way, and I use it now, I've learned how to use ChatGPT. I use it all the time for stuff like this. It will give you just a constant stream of knowledge. So ChatGPT, if you don't understand what it is, it's a language model. Okay, it's not actually itself very smart. It puts together language based upon questions that you asked it. It itself doesn't actually understand anything. It's just piecing together pieces of information based upon the prompt that you give it, which is why the prompt has to be so good. So broad strokes, what is it? Unemployment claims shows the number of people who filed for unemployment benefits in the previous week. So little things like that really helped me, because it was like, well, unemployment claims, you might understand what unemployment claims are, but actually what it is really helpful. Why it matters, strong labor market suggests the economy is doing well. So we can then go back to these and be like, right, okay, so the forecast is in December, 26th of December, the forecast was 223, okay? The actual was 219. okay, which, isn't great necessarily, okay, because the forecast it's the other way around. The amount of people unemployed has come down from the forecast. That's good for the dollar. So that would mean that we have positive news, right? But what's also really good to look at these is look at these numbers in comparison with each other. So 242, 220, 219. Okay, our forecast is 222. So if the actual comes in at 215, what will that do to the dollar most likely? So if it comes down again, if unemployment comes down again, is that good or bad for the economy?
Stop, wouldn't it?
Good.
Weaken.
No,
No.
It's good.
it's
It's
good.
good.
Good for the
Oh,
economy.
yeah,
Okay?
yeah,
So if
yeah.
unemployment's come from 242, so
Oh, yeah, I got it all the way around.
242,000 people, down to 220, down to 219. So, sorry, this is how many people have filed for unemployment. Okay, so 242, 220, 219, 215. That shows that over Christmas time, which is ultimately probably a difficult time of the year to be getting work and things like that, the unemployment numbers are consistently coming down. That shows that the economy, the US economy, is strengthening. So what you can then do is you can go to the dollar, okay, and you can have a look at the dollar itself, okay, and look at say, and what I use news for, by the way, is like what's called a macro view. So what is your higher time frame view of where the market is headed? Is this market bullish or bearish?
Bullish.
Bullish, right? So if we get some good news, so if we have unchanged numbers from the 219 or that number comes down, then it's likely to do what?
Go up.
Go up, right?
Continue bullish.
Continue bullish. Exactly, right? So this is and this is all you need. This is as much of an understanding as you need, I believe anyway. I'm funny enough, I'm about to do some education myself from a technical a fundamental specialist to see if it helps me any further. And if it does, I'm obviously going to pass that knowledge on to you guys. But I don't think it's make a huge amount of difference because I understand what these news events do and I understand how they impact currencies. So for me, I'm looking at that right. This is already bullish, okay? So I'm doing this research before the news hits, okay? Now, if the news hits and it does this, okay, if it does that, what can I expect to happen next? If the number is 215.
The manipulator loan come up.
Manipulate the loan come up. Okay. So this is how I use my fundamental understanding alongside my news plays. Okay. So what I want to happen is I want a positive or an unchanged number to those unemployment rates. I then want price to shift bearish. And then I want a reversal, a nice simple reversal, and then I can trade into it. Okay. And my target would ultimately be that trap. And I take the low of the trap as my first profit target, or probably even sooner if we get a nice tight entry, and the high of the trap as my second target. That, for me, is as difficult as it needs to be. So if we go back to that example, Sam, just coming back to what we were talking about just a moment ago, go back to this example over here. Never going to be able to find it now, am I? Let's just find a other example. It was October, wasn't it? What date was it in October? You all remember?
16th, I thought it was.
The 16th, was it?
I think. I'm not sure.
Right. Go back. Yeah, here it was. Okay. So we go back to the example in October. Let's say this was exactly that example that we've just spoken about. Okay. There's always a method in my madness, guys. Never think that I've gone off completely on a tangent. I always know where I'm going with my conversation, probably. Okay. We've taken out our key liquidity level to the left. Okay. The news has come in. Unemployment has dropped even further. So, Sam, you can now take a nice, safe, comfortable buy into that trap. And remember, we don't care where it's going to go after that trap. All we use the trap for is just literally our first target. So IFB, ITB here. Okay. We take a buy like sweep, manipulation, MSU. It's 5-minute MSU, so let's just use this one. We use that engulfing, put a stop down there for argument's sake. And then we're going to be trading to the bottom of the trap. Let's use the whole trap, which is there. Okay, that gives us a 4.2. I'm taking most of my profit out about here. Okay, so I'm happy. First profit, second profit, and then I'll hold for whatever. If I come back down to break even, which it looks like I do get break even on that one, then that's fine. Okay, because all I need is I need my fundamentals. I need to understand kind of broad strokes, and that's why, you know, when I go to ChatGPT, I'll be like, give me the broad strokes, give me what to expect. So let's go through this. Why it matters. Strong labor market, it suggests the economy is doing well, which can strengthen the dollar. Weak labor market may indicate slowing growth, potentially weakening dollar. So this is the report shows the number of people who've filed for unemployment. It's a proxy for labor market health. Fewer claims equals stronger job market, more claims, weaker job market. So if those of you don't understand what this is, so these are for benefits. So, you know, like in the UK where you sign on for universal credit, or what used to be, can't remember what it was called, whatever it was called before that, okay? This is a report of how many people have gone and signed on, okay, to claim their benefits, okay? So if less people have signed on, less people have filed for unemployment, okay, it means that the economy is bolstering, is improving, okay? So trading around it before the release, market may be range bound or choppy, avoid large positions immediately before the release, so it gives you really practical knowledge like this. And do you know what? You guys probably know that already. You probably know that you shouldn't be taking trades. But you know what? Sometimes doing stuff like this, I often talk about, you know, we've been doing a lot of work on trading plans lately and the checklists and things like that. And a few people I had conversations with, just to be like, I know you know your checklist. I know you know what you should be doing. But every single time you take a trade, go through the checklist. How many of you guys are guilty of having rules, not following them, and taking trades, and then coming back to those trades when it fails and realizing it doesn't meet your rules? Everyone in here probably guilty of that once or twice. Maybe not once or twice. I mean, I could probably count on 100 hands how many times I've done that.
Once, twice a day.
Yeah, twice a day.
Yeah,
Right?
yeah.
Yeah. And you go back, don't you? You get to the end of the day, you go to fill out your journal, you look at your checklist, and you think, fuck's sake, it missed 3 of my 6 checklist points. But why have you done that? Why does that happen? What's the psychology around that? Can anyone tell me?
Greed, FOMO.
Greed, FOMO, yeah. What else?
Excited. Think you know better than you plan.
Think you know better than the plan. It's you being married to your bias.
Undisciplined as well, isn't it?
Undisciplined, yeah. Basically, you're trading on emotions. That is the epitome of trading on emotions. You think you see something, and because you think you see something, you take that trade anyway, knowing deep down that it doesn't quite meet your plan. I know I'm guilty of that. I know I'm guilty of that recently. I do it regularly. And I get to the end of the day, and I'm like, why did I take that trade? So now I've got my checklist on my wall. And if you guys haven't done something similar, whether it's on your phone, I think it needs to be an eye line. So some people have said I'm going to put it on my phone. Some people have said I'm going to check my trading plan. I think you need, wherever you trade from, you need it like there. I've got it there. So I can see it. Okay. And I now can't get away from it. And it's just a visual aid. Same as this. Avoid large positions immediately before the release. That might stop you from putting a trade on. Okay. At the release, if data deviates significantly from forecasts, expect sharp moves. So that's a really important thing to note about news as well. Forecast is 223, and the forecast here is 222. Okay. If the actual comes in at the forecast or there or thereabouts, probably won't have much of an impact on price. Okay. Because the forecasted numbers are already what's called priced into the marketplace. So people start trading off the back of the forecast already. So the fact that that forecast is higher than the actual would have had a negative impact on the dollar. That will already be priced in. The people that are speculating that result will have already taken their trades effectively. So if it stays at 222, expect no change. Where you actually get the volatile moves in the marketplaces are big news events like FOMC and NFP, or where the actual differs from the forecast. If it's much higher, it's going to have a negative impact on the dollar. If it's much lower than the forecast, it's going to have a positive impact on the dollar. Okay. After the release, wait to 5 minutes before taking trades. I'd argue half an hour. You need half an hour just to wait for that volatility to die down. Look for confirmation and momentum and follow through direction based on the data. So one thing that ChatGPT is good with nowadays is it learns about you. So this is basically exactly how I trade. Look for confirmation of momentum, okay, which is that, okay. Confirmation of momentum is your IFB, your ITB, okay, and then wait for a confirmed entry, okay. Potential scenarios: lower than expected indicate strong labor market, dollar strengthens, and EU likely falls. Considering short EU if technicals align, blah 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 blah. If you and look, you can. I'll put this prompt in the group, and you guys then can play around with it yourself. So where are we? Community at everyone. Chat GPT prompt. In fact, I can go one better. Can you template this prompt for me for my trading community so that they can fill in the blanks, and then copy and paste to you when other news events come up, and allow currency to, where they can change the prompt. It's chosen pair. See if we can come up with a template for us. Okay, perfect. Acting as a Forex trader, trading primarily insert your currency pair. I want you to give me a simple explanation as to how their insert news events at insert time and time zone tomorrow might affect insert base quote currency. Please give me the broad strokes, how I should be trading around it, explain to me. So look, now you've got a prompt, right? Okay. Everyone, ChatGPT prompt for news events. And if anyone is better than me at ChatGPT, I know there's like some proper experts on it these days. Feel free to come back with any better prompts if you think you can come up with some even better suggestions. Okay, so that's now in the chat. All right. But yeah, I think, coming back to your question, Sam, for me, I will typically only trade back into news traps. I don't really like trading in line, like taking a trade like this. Okay, they're often a bit shit, and they often don't have like a great stop loss. I mean, you can take them. It is there. We did do a module on it. You can take trades like that. They're just often much more difficult to get involved in. And the problem with those sorts of moves is what they often do is they do this, right? And they push down, and then you like normally at like 4 p.m. by this point, and then you have very little movement. So normally when I have a continuation news, what I prefer to do is wait for Asia to kind of pull back, and then it will normally take out some sort of liquidity, and then I can take the sell the next day. So if I do get a continuation news, I'm finding more recently I'm not trading them anymore. I'll trade the reversal news. And if I get a continuation, I normally wait till the next day, see how kind of price balances out. Because normally continuation moves, what do they normally do? They create a massive like imbalance, right? And then you've got like maybe EPA up here that price needs to come back to. So sometimes what you can get then in London and oh shit, sorry. Oh, done it again. See if we can find one. So FOMC and NFP are quite good for this. So yeah, so look, what was that? 18th of December. That was FOMC, wasn't it? So FOMC, massive bearish move. Okay, you've then had a pullback up here. Prices come in. I think we did actually get this trade. I think we took this as a team. Come into that order block up there. Created structure, MSU, and I think if I remember correctly, we took this trade. Okay, so when you get these big, massive moves like this, I mean, I wouldn't have taken it anyway because obviously it's in the middle of the night, but you'll often after these big moves, you'll get some sort of correction, okay, and then you can trade back into the liquidity that's generated and back down there. All right. So if you do get these continuation plays, consider just letting them play out and wait for the pullback. If you do get a nice reversal, I mean, this is Asia, as you can see, but if you do get a nice reversal, can of course trade back into the trap. The only problem is you have massive moves like this, and when they are like massive like that. So if that setup was here, you're much more likely to get the trap. If that setup's down here, what is that move there? 150 pip move. It's unlikely price is going to come all the way back up. It's unlikely. Okay, it's too bearish of a move for price to come back up. All right, so you can get a trade like that, but the sort of reversal plays that I like are like the one we just looked at, or like these ones here. Okay, maybe not the best example, but these ones here, and you can sell back down into them. Those are the kind of the best like news reversal trades. I love those trades. All right. Yeah, like that. Okay. Well, that's quite a big move itself, to be fair. That one gapped up. What was that? Don't know what that was. That was a weekend one. Is that something to do with Trump? Maybe. Not sure. Anyway, that's a massive move back up. But look, the news event itself could have caused that pullback up. So look, it's just a good idea to keep an eye on the fundamentals and just understand what's going on. Like if you've got a few fundamental events coming up that are all positive for the dollar's still one of the. I think the dollar. I read something the other day. The dollar was actually the strongest currency on the planet as of today. So although we're talking about, the dollar weakening and that sort of stuff, it's actually one of the strongest currency on the planet at the moment, in terms of what's going on in the US economy and Trump getting in and all this other stuff. So, it's bullish for a while. And if you look at kind of weekly Euro USD right now, okay, since September, we've been heavily, heavily, heavily bearish. And it doesn't look like we're slowing down anytime soon. Okay. Look at the last few months, we've been quite range bound. So since start of last year, we've been stuck in this range. Look, okay, we've very clearly now broken out of this range. Lovely close below the range. So we're now in a really strong position for that to continue down. Okay, let's look at the dollar version. So see that? Shit, just call that. Okay, see that range we were stuck in? Okay, we've now broken out of it quite clearly. So, it looks very much like we might come back and just take out that high and then see where we go from there. So, the next few months could be really, really good for us, guys. It could just be a case of we just keep trading in line with it. Make hay where the sun's shining, as I say. All right. Sam, was that helpful?
Yeah, cool. Cheers, pal.
Yeah. What were you kind of struggling with in terms of the news side of it?
I always get confused. So you sort of cleared it up when you was on about the big moves down. I understand the fundamentals and unemployment coming down comes to strengthening stuff like that. But when you did the 150 pip move down, I would always expect price to come up and take all that back out.
Yeah.
Or fill it all back in, if that makes sense.
But that's where the understanding of the fundamentals are so important as well. Understanding what Powell says in his FOMC speeches in order for price to react like that. And even if you don't want to spend time researching, just go and look at like FX Street or Investopedia, or there's plenty of other places that you can look at and just try and understand what's going on, because you'll generally get quite a good gist. That most of the articles will say Powell's speech announces hawkish dollar or dovish dollar. So they don't use bullish and bearish; they say hawkish and dovish. So you'll often get from the news articles as well an understanding of what was said by Powell, if we're talking about FOMC, for example, and how that might impact price. But yeah, if nothing else, just get a basic understanding and let's just use your technicals. The trade we looked at on the FOMC position, it wasn't a terrible trade. You could have bought into it, but expecting it to come back and hit the trap after a 150 pip move was probably unlikely. But if you're taking partials, then you should be okay anyway. I don't think there was a setup on the FOMC one anyway, because it went into Asia, because obviously it was a 7 o'clock news and event, went into Asia pulled back, and then it gave us a good sell setup anyway. So the fundamentals aligned with the technicals there. And that's really where you're going to make your money, guys. When we've got big news events, when your fundamentals align with the technicals, that's where you're going to make your money, ultimately. Alarit? Cool. All right, guys. Well, look, thank you for your time tonight. Thank you for your questions. We'll get another Q&A in, probably end of the week. If any of you've got any kind of things that you want to go over, or anything extra that you need from me, just fire them across to me in our chats and I can put something together on Friday. But I think these Q&A sessions are good. Rather than me just trying to come up with a concept for you guys can effectively come up with a concept to kind of what's the word I'm looking for? Yeah, to kind of guide the sessions yourself so that you guys get the questions answered that you want answered. All right. I'll get this recorded. I'll get it uploaded for those that have missed it. And if those of you that want to go back over it, and obviously if it has raised any more questions, find them across to me in the chat. I'll be more than happy to help.
Let's check.
Cool. Cheers, guys. Have a lovely evening. All right. Catch you tomorrow.
Cheers, mate.
See you later.
Cheers.
Enjoy Traitors.
Cheers. And you, because you're going to watch it, right?
Yeah, I will. I'll be there.
We're 15 minutes late, admittedly. See you later. Bye.
Bye.